The RBA has recently cut interest rates once again, multiple interest rate cuts now. In this episode, let's go through how this will impact the Australian housing market. Where will house prices end up finishing in 2026? Let's go through population growth forecasts city by city. Let's go through supply forecasts city by city to get an understanding of supply versus demand city by city. House prices are definitely rising. The time to buy was yesterday. The next best time to buy is today. This episode will show you where are the best areas. And for those of you who watch right through to the end, I'm going to save an exciting location and elaborate upon it so that you can make money right now. There is no reason, provided you have the cash flows, not to invest in real estate right now, because if you listen or watch this episode in 2 years' time, you'll look back and regret not taking action on the back of it.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
So at a high level, the HSB chief economist Paul Bloxham is expecting solid house price growth now to continue after this most recent interest rate cut. There have been multiple interest rate cuts now. His bank is forecasting rises at a macro of between 4 and 9% in 2026. The rate cut would spur activity for all property purchases, including first-time home buyers. Yet, at the same time, the rise in house prices would exacerbate the existing housing affordability challenge. It's a real paradoxical thing, right, to say that house prices are unaffordable, which they are, but then also to say that house prices will rise. Well, if they're unaffordable, how will they rise? And the answer to this question is that they are unaffordable for the median or the average Australian. However, there are enough people in the top 20% or top 30% who can afford them, and therefore there is sufficient demand for these houses and house prices rise. This is capitalism in action, whether you like it or not. At a high level, Domain expects house prices over 26 to rise by 6% and units to rise by 5%. For Brisbane, that's 5% for houses and 5% for units. Sydney, 7% and 6%. Canberra, 4% and 3%. Melbourne, 6% and 5%. Adelaide, 4% and 3%. And Perth, 5% and 6%. Let me just say right off the bat that I don't really agree with these forecasts. I think Brisbane will grow much higher than that. I think Sydney is pretty accurate. Canberra is also pretty accurate. I think Melbourne has a real fighting chance of growing at a larger speed in the housing market, but at a lower speed in the unit market. Adelaide is probably going to outperform what they are suggesting across both dwelling types, as is Perth, and we'll get into why as well. And here's their property clock, and I'm going to share with you my thoughts per the data on it as well. So they think Canberra is at around 7 o'clock, which means that it's just about primed for a recovery. I think Canberra has very high vacancy rates still, around or if not above 2%, and much of the other data is weak as well. So I think Canberra is more like a 4 o'clock, maybe a 5 o'clock. A little bit too early to invest. Of course, Canberra has a huge land tax, so we try to avoid going there anyway. Melbourne, they are saying, is at about 7:30 or 8 p.m., which means prices have already been growing pretty strongly, but the boom is just around the corner. Actually, at a macro level, I think Melbourne is more like 6 o'clock, because at a city level, house prices are pretty shallow right now. They're not really growing very fast, but there are markets within Melbourne, like the Northern Corridor, which I did an episode on about a year ago. I shared with you a suburb called Broadmeadows, and that's already done 10 to 20% since I released that episode. And so there are some areas of Melbourne that are positively booming, which are actually around 9 o'clock. But overall, I think Melbourne is more like 6 o'clock. Sydney is very much in the 5 to 6 o'clock category in my mind because it has been very poorly performing over the last few years. But given these interest rate cuts that we've seen recently, and more probably, or could be, if any, on the way, that will really help Sydney's affordability story. And Sydney's really the city that benefits the most from lower interest rates because it's the most unaffordable. So people need lower interest rates to buy there. So if interest rates do keep falling, Sydney could really come into the green. Brisbane, I actually think, is more like a 10:30 or 11 o'clock. It's been one of the best performing property markets alongside Adelaide and Perth. In fact, it led the boom post COVID, even before Adelaide and Perth. So I think it's more like 11 o'clock. There are still some locations in Brisbane that are going to perform at 20 to 30% over the next 12 to 18 months. But at a macro, I think it's had its time in this cycle. That doesn't mean it's not going to grow again before the Olympic Games and have another cycle. And then Perth and Adelaide, I think Perth was actually up there near 11 o'clock too. But you see the latest immigration results in Perth, and I'll share them with you in a second as well. You see that it's continuing. Supply is still very soft in Perth. And even though iron ore prices have come down, it's really holding its own in terms of a diversified economy, just like I predicted all the way back in 2021 and 2022. So I think Perth is experiencing a bit of a second wind, and it's probably around the 9 to 10 o'clock. And Adelaide has been the star performer. I think we started investing there in 2019. It's just been steady as she goes. Not just steady, in fact, it's been booming as she goes. I think about a year ago, I said, it's really unlikely for Adelaide to continue booming. It has defied all odds, including me, and continued doing that. I think it's very hard to see another 20% growth rate in Adelaide, or even 10% growth rate for that matter. So I think it is between 11 and 12 o'clock. Let's go into some of these population projections. Now we see the FY26 and FY27 population projections here in the dark green and in the gray. Now, of course, these are projections. Anything can happen. In fact, recently, our friend Albo has increased the student intake, immigration intake once again. Maybe a little bit tone deaf from him, but he's done that nonetheless. So I think the 27 projections and even the 26 projections, a little bit on the lower side, if anything. We did re-elect Labour back in, so, what do you expect? Now for 26, check it out. The largest immigration story, population growth story is still occurring in WA. Now we know that population increases in Australia are predominantly led by immigration because the natural birth rate is only about 100,000 folks every year. So 1.7% increase in population in FY26 in WA, that's the highest. Second is Victoria at 1.6% in 26. And then third is Queensland, 1.5%. I'm really bullish on WA and Queensland. Victoria, I am bullish on as well, but in a more tempered way. And I'll share why in a second by sharing the supply side, the other side of the equation, demand versus supply. And then you've got New South Wales at 1.1%, which is pretty strong. ACT as well at 1.4%, and SA all the way down at 0.8%. So it's hard to see, this Adelaide boom carrying on. Of course, regional locations in South Australia, like Mount Gambier, are likely to do really well because people initially may come to Adelaide or may live in Adelaide, and then as they become priced out of Adelaide, they go to these regional towns that are still commuting distance or still commutable to major metropolitan job centers in SA, but are cheaper to buy in. So I'm more bullish on regional SA right now than I am on Adelaide proper. But you can see in FY27, WA is still number one at 1.4% growth rate in population, followed by Victoria as well at 1.4, and Queensland 1.3, ACT and 1.3. So in that following year, you might see Canberra finally come out of the doldrums and start to show some positive price pressure in its housing market. This is the chart that I wanted to share in terms of housing supply. It shows both the target of how much the government wants new houses in that state and also the actual increase in houses so far, new supply coming online. Right now, the state that is missing its target by the most is New South Wales, and it's missing it by almost 35%. That is huge, and I think that's why not just Sydney, but regional locations in New South Wales like Albury, Wodonga, maybe just a little bit west from Newcastle, and other locations as well are going to do really well. Of course, I know that Wodonga is not technically New South Wales, but close enough. Victoria, this is where I was getting at before. Although population sounds really amazing, it's increasing, that's good, right, for house prices to go up, depending on how you look at it. But it's actually meeting its housing targets. It's actually meeting its supply commitments at 60,000. So that means that, yes, migration is coming in, but that housing supply is also increasing. Now, keep in mind, these targets are actually not enough to meet your migration targets, and that the government and Treasurer has also already admitted, but nonetheless, they are meeting their targets. The other state that's wildly missing their target is Queensland. Once again, they're missing it by more than 30%, a bit like New South Wales. So that bodes well for house price increases in Brisbane, although I did say towards the start of this episode that it started to become a little bit peaky and unaffordable, but regional Queensland still got some legs. WA is also missing its target by a long way, followed by SA, and ACT's meeting its target. So although population increase in ACT is quite buoyant, not just in 26, but in 27 as well, you see that supply is keeping up, so house prices are unlikely to boom there anytime soon. Now, I'm going to pick on a few cities to do a bit of a deep dive. Let's start with Melbourne. Now, they're expecting domainers for house prices in Melbourne to really start picking up in 26. In fact, by the end of the year, they're expecting the average house price to be $1.11 million. A key advantage, they say, for Melbourne is its relative value compared to other cities. Check this out. Sydney in 2019, 25.7% more expensive than Melbourne. Fast forward, now it's 63% more expensive. Brisbane, 2019, 35% cheaper than Melbourne, now only 1.3% cheaper. Adelaide, 40% cheaper than Melbourne in 2019, now only 3.4% cheaper. Canberra, 13% cheaper than Melbourne, now 1.3% more expensive than Melbourne. And Perth, 40% cheaper 2019, now only 11% cheaper. All this suggests, it's not just against like one other city as a relative point of reference. This suggests Melbourne has so much value. And if you can afford the cash flows, I would recommend buy in Melbourne. Honestly speaking, not just anywhere. Right now, my clients are investing in about 6 to 10 locations. They've already made double-digit growths over the last 12 months and will continue to do that. If you need a yield of more than 5.5%, there are better locations to invest in. But if you are okay with a sub 5% yield, sub 5.5% yield, you will not regret buying in Melbourne. Looking back 10 years, you'll say, I wish I bought back when PK did that episode rather than wait. Another thing going for Melbourne is new mortgage repayments as a share of dual income household. In other words, the share of your gross disposable income that is going into your mortgage. You can see from 2019 in Sydney, it's gone from 47% to now 77%, all right, of your gross disposable income. That's crazy. Okay, Brisbane, it's gone up huge from 27 to 51, almost doubling. Adelaide, it's gone from 27 to 54, once again, doubling almost. Canberra also, it's gone up from 21 to 30%. Really high incomes in Canberra, of course, just like in Perth, but Perth has almost doubled as well, 22.3% to 41.4%. But here we go in Melbourne. Yes, Melbourne affordability has also got worse. It's not like house prices have gone backwards since 2019, but the share of gross disposable income going to mortgages has only gone up from 42.4% to 55.2%. On a relative basis, this is the smallest erosion of affordability compared to any other capital city. So once again, that latent ability for people to borrow more, they can, because in Sydney, they go up to 77.5%. People can stretch themselves, or at least enough people can stretch themselves. That can happen in Melbourne too. And if and when that happens, Melbourne too will increase by 50%, if not 100%, in the next 5 to 7 years. Now, you add to this the fact that government support for first home buyers is set to push home prices even further up. The latest initiatives, I've talked about them before, including scrapping lenders' mortgage insurance for first home buyers and expanding the shared equity scheme. These measures, amongst others, will increase both the number of potential buyers and their purchasing power. Of course, housing supply is too slow to respond to the immigration that we're experiencing now and in the future. This is likely to contribute to really strong growth going forward too. I said at the start of the episode, I'm going to give you a free area for you to look into further. Of course, there are markets within markets. You can't just go by this and put a blindfold on and invest in a house. You need to find the right suburb, the right street, the right property. So much due diligence to be done, which you cannot outsource because no one cares about your money as much as you do. But here's some free suggestions. Hume in the statistical area 3 as given by ABS, Australian Bureau of Statistics. Wodonga, the market shows strength as prices double in a decade. Wodonga, population 44,000. The Victorian twin city to Albury. Together, they have a population of well over 100,000. Has continued to exhibit property market strength since the COVID peak of 22. The twin cities on the Hume Highway between Sydney and Melbourne are proving attractive because of their affordability and amenities. Albury Wodonga has 2 university campuses, Charles Sturt and La Trobe, major hospital and major military area. The average median house price rose just 2.2%. And this is the opportunity, right? Just 2.2% to 571,000, but it rose almost 50% between 2019 and 2022. So given that it's had a soft 2 or 3 years now, it's due for its next cycle. And we know it can have big cycles because it grew by 89% between 2015 and 24, which is not all because of COVID. In fact, it grew before that as well. So look, in summary, the real estate that will rise the most on the back of multiple interest rate cuts should be the 6 inches between your 2 ears, because if you can invest in that real estate, everything that I shared with you right now, free information, pales in insignificance to the level of data analysis and aptitude and competency you can build for yourself, by yourself, through having mentorship. You can go far deeper, far clearer, and far more precise. It's like when you have been trained as a sniper, you can have your rifle out and 100 meters away, you can pick out a target with accuracy 10 times out of 10. That is what data and mentorship allows you to do. And if you can pinpoint those locations that are going to boom, the best time to invest is right now. If you don't do so, you will regret it, because the best locations will grow over the next 12 months by at least 20 to 30%. I've said this for years. It's always been right. The credit is not mine. The credit is in the rifle, the data, the system. You can have access to the system as well. But first, I'll leave a link below to my free Facebook group, Oz Property Mastery with PK. Get to know me, get to know our community. There's more than 60,000 people there. Follow along on the Spotify and Apple, YouTube Music, podcast Oz Property Mastery with PK to really level up. Hit the subscribe button, give it a thumbs up, and please don't be inactive. This is not the right time to twiddle your thumbs. You'll go backwards while everyone else goes forward. Catch you later.